This is Cece. Welcome to the Orbit. It is Friday, March 22nd. We've got stocks pretty much unchanged. We're looking at the SPX down about 5 points from yesterday's close. We're also looking at a two-day chart here, and as you can see, we've had this strong move higher after the FOMC announcement. We had those green candles you can see on the chart right here. That's after the FOMC announced. Then you had a gap higher yesterday, pretty much sideways action, a little bit of a sell-off into the close, and a very, very tiny bit of follow-through on that selling to start today. What do we have going on here? We obviously have the markets at new highs. We've got a continuation. If we go out and we look at that 1 month chart, we've got a continuation of this channel trend line higher. You can see we're up near the top of that channel now after this move over the last couple of days. You saw where it sort of bottomed out in that channel. So basically back to what we have been seeing in the last few weeks. And there's an added component here that we've been talking a little bit about on the Orbit and on the Orbit Twitter, for instance, is after you have a buildup into an event like the FOMC and volatility was increasing, options traders became buyers slightly. We didn't get into any sort of crazy levels of IV and premium, but you did see the VIX up near 16. You saw a lot of intraday volatility the last 2 weeks, some of those wild moves. The SPX would move 25 points. You'd see these 50 point swings intraday in SPX. And so all of that kind of added up to the fact that there was a little bit of nervousness. There was a lack of certainty in the market. And then you had the FOMC meeting that everybody kind of had circled on their calendar. And what that means is after that, if the reaction is bullish, which has been the last 2 days, and stocks went higher, volatility gets crushed in those situations, and all of those buyers turn into sellers. And what that can do is it can really put a governor on the market. The biggest gamma effects you tend to see in the market is not just that the VIX is 12, it's that the VIX just quickly came down to 12. And what that is that's the sign of a million traders turning around and selling all of their puts back to market makers, and you could load up market makers very quickly and they could get off sides. Is that what just happened? We will see. It's only been a day, but we are going into a holiday week, a shortened holiday week with next Friday off into the Easter holiday. And you can look at these volatilities, single digits. When's the last time we saw single digits IV in SPX? And there we have it. It's about 10. Even if you go out on this 1 month chart a little bit, you're only really getting to 10. So now the VIX is gone from 15 to 13. Do we see it back towards those, that 12 level and all? And if you recall what the market feels like with the VIX at 12, is it tends to be a slow grind higher. And the only thing that kind of takes you out of that loaded gamma feel, if that's where we are headed, is some sort of news, obviously, that would, we've got GDP next week. We've got more inflation data coming in like PCE, and that could shake the market out of a low vol environment. But until then, what the market looks like, what the major indices look like, tend to be, in those conditions, slow grinds higher. You're going to have red days, but they might not be that violent. So we will see. We don't know yet, but it certainly has the conditions to set up for a very sideways week. And what does that look like? That looks like 0 DTE vol, which we've seen. So right now, this 0 DTE vol for today is just 16. That opened at about 20. And this is with stocks slightly lower. And that is a very low 0 DTE vol reading. We saw that into the FOMC as high as 40. Typically, you would see 0 DTE vol up in the 20s, even if the next day was in the teens. But right now, we are seeing this in the mid-teens. And then when you go out to the next week, you are seeing IV readings of 9 and 10. And so what that means is if you're a premium seller, it's potentially the right conditions as far as realized vol goes, and you might see a market not make very big moves or runs intraday or even gaps day to day, potentially. However, you've got to be careful at what vol levels you're selling things. And perhaps that means you do have to leg in and leg out of positions based on small market moves intraday. So that is something to be aware of if you're a premium seller. Now, if you're a premium buyer, and what I mean by that is somebody setting up to do something directionally in an individual stock or the market or to hedge or anything like that, you take a stock like Apple, and we're looking at a 3-month chart right here. And what you're going to see, even though this has been going lower and it has an ugly day yesterday, Apple option volatility will be affected by the overall market, and it might tend to be lower than what this kind of Apple move would look like under conditions with the VIX at, say, 16 or 18. When the VIX is 13 or 12, it might keep a damper on overall volatility, which means you might be able to get into some directional trades in a stock like Apple at low volatility, despite what the stock is doing. So if you were looking for a play to, for Apple to go back higher, let's just go out to the end of April. You're going to get some pretty low vol levels. That break even is only about $3.50 higher, and it's been making moves. The stock has been making moves like that in single days lately, or over the course of 2 days, and this is out to the end of April. And the same thing is true if you were looking to do a put spread in a stock. Going out into that April, May range might get you some pretty low vol trades, which means pretty close break evens in some of those spreads. As far as SPX, the rest of the day, we're looking at 52.55 to the upside and 52.25 to the downside. That is a very narrow range, as you can see. And again, because it is Expiration Friday, sometimes you look at some of those open interest levels, look for those gamma levels potentially, 52.40, 52.50 if the market were to go green. So that's the highest open interest, and they tend to act like a magnet on an Expiration Friday.